Hello and welcome to Jazzy Trader. Hello, welcome to Jazzy Trader. I'm Jasmine, and today we're going to be looking at a trade that I took on the Dow Jones earlier. I took about 4 or 5 trades on the Dow Jones. They were scalps. Let's see. But this was the most notable trade that I wanted to use as a teachable moment. This was actually a winning trade. Now, it didn't turn into a losing trade, but it basically, in my opinion, it did because of how much I was up. This is a small prop firm account challenge. So I was up about 230 bucks, I believe, total on this trade. And we're going to hop into it so you can kind of see what I did, see what I was thinking at the time I got into the trade. So first off, I want to make note of this resistance up here. Price traded down. The time this was, it had to be between 9 and 9:30. Don't quote me on that. But it was 10 o'clock, 10 a.m. New York time. So it's 9 o'clock Central Time, but this was around 10 to 11 New York time. But anyway, price had traded down, and when price had reached that higher time frame area of liquidity, I was looking for it. I was expecting it to reverse because it had moved down. I was expecting it to go up. There is a higher time frame PD array that I'm shooting for. I may do a different video another day on what a PD array is, but I was looking for a higher time frame bias for price to go up a little bit more before it actually drops heavy. That's what I'm expecting. So I took this trade because it was a perfect setup. It's what I look for. And so, yeah, let's get into it. So that purple line right there that you see where this green arrow is pointing, that's where price was when I got into this trade. So price was around 40.86.7. Why did I get in right there is because, I mean, what I've studied. These are ICT concepts. I've studied them and very intensely over these last past years, and I just know to look for that. I may get into a little more technical aspect of the trade, but ultimately I got in because that pool of liquidity was taking, and I was expecting on a higher time frame for price to get up there before it actually sells off heavily. Now, so with that being said, I got in where this purple line is, but where this green line is how far up the trade went. This green line where that purple arrow is pointing, that's how far price went up from my entry price, the purple line, to the purple arrow is how far price went up. And I was up about 230 bucks. And again, this is a small prop firm challenge account. So 230 bucks would have been a good return, and it would have got me out of the little bit of drawdown that I was in. But I stayed in the trade. I should have took something off. That's why it's important to, when you do reach areas of liquidity that has been taken or reach a new high, because at the time before this happened, when the market opened at 5, before the market opened, this was the high that was created, and I should have taken something off there at that new high, but I didn't. So the yellow line is where my stop loss was. So initially, when I first got into the trade, my stop loss was under this swing low. That's where my initial stop loss was. So hopefully I'm not confusing you, but taking you back, when price was here, my stop loss, that yellow line was here. As price moved in my favor, I brought that yellow line up, meaning my stop loss. So I brought my stop loss up into profit. Now, once it was in profit, it shot up right here. And that's where I should have taken something off or the whole thing off. But anyway, price ended up coming back down. It almost took me out. And I almost got to break even because my stop loss was a little bit past. But I end up exiting this trade manually. I didn't let it hit my break even point where my entry was, and I didn't let it hit my stop loss either. I just got out manually. But that's why, and I'm talking to myself as well, but that's why it's so important to take something off. But when you've been doing this a while, like I'm not saying 5 years is a whole hell of a lot of time, but when you consider the amount of hours I've put into trading, it's a lot of it's a lot of time. I've put thousands of hours into trading. I've really been in these charts and in these markets studying this stuff along with ICT concepts. But once you've studied so long, once you see your setup, you want it to go where you want it to go. And even as what I would consider myself an experienced trader, I still need to know when to take something off. And this was a beautiful play. I actually probably could have taken something off at that high or this one or this high and then let it trade back down, taking profit, enter again to shoot up to this high right here. This was a beautiful, I love that volatility I seen when this creeped up to where that green line is. But again, we have resistance over here. So it did stifle that resistance. The resistance did stifle the trade because when I got in here, I was expecting it to do what it did here and continue up. Actually, I think the market is still going up as we speak because I'm doing this the day of. The day I took this trade is the day I'm doing this review. So I think that's about it. Just learning to not be greedy, learning to take something off. This is a very good trade. If it had went up, went shot straight up, it would have been even more beautiful. But the market doesn't move straight up or down. That's something I had to learn the hard way because I would get so happy like in a trade when it's going up, but not knowing what a retracement was. Didn't know that from Sam Adams. Didn't know. I think that's how you say that phrase. I could be saying it wrong, but anyway. Didn't know what a retracement was. What is a stop loss? I didn't know these things. So when the market even would go up, I would just be so in awe. And that's not how you trade. You have to really learn to taper your emotions and really focus on what you're doing. But anyway, that's it for this video. I want to go ahead and get it out. Excuse me. I want to go ahead and get it out because this is the day of. I don't want it to run too late, but I do plan to be more active. Um, as far as posting videos and doing reviews, and actually may just go into some psychology of trading. I have some great jewels and gems when it comes to the psychology of trading, and I would love to add them in here as well. But thank you for watching this. Those of you who do understand it's boring, but you see the potential, it's boring, but you're a learner and you're willing to sit there and learn this. Kudos to you. Kudos to you, and thank you. Thank you for your time. And I will see you guys in the next one. If you do have any requests, I do heavily study ICT concepts. I can drop some jewels or some tips and do some videos on those if you're interested. And if you would like a certain style of learning, let me know how you learn. Let me know what would make this interesting other than me twerking. I don't know who I'm talking to, but you know who I'm talking to. But other than that, let me know what would make this more interesting for you. And I will do my best to kind of mix it up so we can all be pulled in and drawn in together. But I really do enjoy doing this, and I just enjoy teaching any subject that I'm aware of, that I know enough about. I love sharing information. I love absorbing information. But yeah, so I will see you guys in the next one. I'm rambling a little bit, but thank you for listening. Um, See you later. I'll see you in the next one.